It's Tuesday, March 5th, 2024. Beautiful 80-degree day here in Palm Desert, California. I feel blessed to be alive. I hope you do too. Please make sure to like, share, subscribe. Hit that bell notification down below so that you are alerted when the newest videos drop. I want to get right into this. Markets are still open, and just a quick update here. The Dow Jones is down over 500, NASDAQ down over 300. We'll see how the day ends. But in the meantime, what is up is gold. Gold right now, as I make this video, is up around $12. We're at an all-time high here. You know, I remember last year, the year before, people would say, I'm not going to buy gold till it hits $800 an ounce and you're paying too much. And look, if you see what I'm seeing, more inflation, more devaluation of the currency, more global uncertainty, more global debt, you're betting against the debt. And if you're a person like myself who still has the mindset, if you don't hold it, you don't own it, you want something physical, something that you can get to quickly, untrackable, unhackable, untaxable, then you're buying gold. And, you know, I'm probably 70% gold, 30% silver. Silver pulled back today. It is very volatile, but at some point it is going to go along for the ride with gold, in my opinion. So gold doing very well today. I would imagine that if we do not get this rate cut in June, you're going to see a pullback. No doubt about it. Probably a great time to buy. I just don't see how the Fed is going to be able to cut rates. I don't. But if they do, fantastic. Gold's going up without a doubt. But there was an interesting article here on CNBC. As gold scales all-time highs, Wall Street analysts say it has even further to go. Citi is forecasting gold to go to $2,300 in the second half of this year, and in the next 12 to 16 months, they're forecasting it to go over $3,000 an ounce. So I believe it is going to do that. I believe we're going to see all-time highs, multiple all-time highs this year. As we're at another all-time high right now, I believe this summer we will see another all-time high in gold, probably multiple all-time highs. This most of you have probably been impacted by today. Facebook, Instagram service restored after widespread outages. X, I guess, was not affected, but Facebook, Instagram, I heard even YouTube to some degree was. WhatsApp affected. What happened? They're not saying another glitch, apparently. Issues have been resolved. But it says here that when people went on their Facebook and Instagram this morning, it displayed failed to load, error pages, and this was global. So what do you think about this? Was this a glitch? Was this an attack on the system? I don't really know, but it makes me think, how safe is your money if your money is sitting on a computer? How safe is the entire system, as most of the system is run by computers? And now that they're talking about more digital money and CBDCs and, you know, more cryptos, do you feel safe with all this, with all this digital monetization, digital technology? Do you feel safe? They want to track everywhere you spend a penny, a dime, a dollar. They want to track you and how easily you can be shut off, how easily your money can be shut off. I think it's scary. And I think the more that we go in this direction, the more vulnerable each one of us are. What happens when you cannot log in to your bank account? What happens when your balance is zero? What happens when all this goes down? And look, we're seeing these attacks every day, and they're going to get worse. And it's just a matter of time before a big bank, a huge financial institution, the stock market, something huge gets hit, and it affects everybody. And what happens when people cannot access their money, when people's plastic cards don't work, when they go to the ATM and the ATMs are down, when they go to the store and the cards aren't working and the store cannot do a transaction? This is what you better be thinking about. This is why I think it's super important to own some silver right now, barterable items, to have some cash on hand. These are all things that I think are extremely, extremely important. If you need a good place to buy silver, a good place to buy gold, just go to my link down below, SD Bullion. Been dealing with them for over 6 years now. A phenomenal company. I have nothing bad to say. Many of you use SD Bullion also, and most of you, if not all of you, have said they've been nothing but fantastic, great prices, quick shipping, and reliable. And if, you know, a lot of people are scared, where do I buy gold, where do I buy silver? I don't want to get ripped off. I need somebody reputable. Go to my link, SD Bullion. They'll take good care of you. Economic woes dominate Americans' worries on Super Tuesday. Did you vote? I did. Voted yesterday. And if you didn't, you're a hypocrite. And I know many people out there will say, oh, it doesn't count. You know, I don't even care. I'm going to do it. I think it's my duty, a responsibility. I'm still going to exercise that freedom. Yes. You could argue that it's who's counting the votes, but I'm going to still vote. And I think that I think that if everybody did, this country would be a much different place. Don't be a hypocrite. Get off the couch and exercise your right to vote, because to a degree, it still does count. Now, shifting gears here, WalletHub.com had something very interesting, some very interesting data here, and I was really shocked. This data was published in January. It's a map of credit card delinquencies across the United States of America by state. No state had credit card delinquency had a credit card delinquency rate below 10%. That is staggering. That is shocking. And some of these states have huge amounts of credit card delinquencies. And just to, I'm not going to go through the whole thing, but you can go to WalletHub.com and check out the map yourself. But Texas, their credit card delinquency rate in Texas is 25%, Oklahoma 28%, Kentucky 28%, Tennessee 26%, South Carolina 27%, Alabama 31%, Louisiana 32%, Mississippi 39%. This is mapping credit card delinquencies by the state, ladies and gentlemen. These numbers are out of control. This is not a good sign in regards to the U.S. economy or the health of the average household in America. This is showing us, telling us that people are living, they're reliant with credit cards. That the only way they're existing right now, the only way they're surviving is with credit cards, and they're delinquent. And what happens when these credit cards are maxed out, when they cannot pay these payments, these delinquencies? They get shut off. They have no life jacket at this point. Lowest delinquency rate states: Iowa 12.9%, Massachusetts 13.5%, Hawaii 13.9%, Rhode Island 14.7%, Washington 14.7%. Remember, these numbers can change very, very quickly. So a state that like Iowa or Hawaii or Washington right now may be low, in a month, 2 months, these numbers can change. They could get better, they could get much worse. But remember, this is third quarter of 2023. We don't even have the fourth quarter numbers, and we don't even have the numbers for 2024 yet, which no doubt are going to be much worse. But this is a lot of delinquencies. And I asked the question for the millionth time: how are people doing it? How are they surviving? How are they affording groceries? How are they paying the light bill? How are they making those car payments, the house payments? At some point, reality is going to come to a head, ladies and gentlemen, and we're going to find out that people haven't been paying these bills, or if they have, it's been with credit cards, and the credit cards are maxed out, and now people are in a jam. What's going to happen? Fed bubble ignites great retirement wave as baby boomers party like it's 1999. This on The Hedge today. I highly recommend you check this article out and read it. Take 5 minutes. It's very, very educational and informative, and it really is going to pique your interest and your perception of things that are happening right now. I'm just going to let this plane fly over. Okay, he's out of our way. It goes on to say here in the article, as the Magnificent Seven tech stocks and home prices gained higher there is a massive surge in the number of Americans taking early retirement, and they're calling this the Great Retirement Boom. The U.S. has around 2.7 million more retirees than initially forecasted. The trend emerges as retirement savers pile into what? Tech stocks. Think about this. Is this a good idea if you're retired that you're piling into tech stocks? And they're saying that this is where 50%, nearly 50% of retirement savers are piling into, okay? Tech stocks. Comment down below. Is this safe? Is this a good idea? A Bloomberg survey showed about half of the retirement savers were buying stocks as a direct response to soaring prices, tech stocks. The latest expectations for interest rate cuts from the Fed this year have fueled the AI bubble, with the sign of the dot-com bubble lurking. It kind of feels like that. This whole thing feels like 1929, 2008, and the dot-com bubble. That's how it feels, all mixed together. Soaring stocks are already convincing those already retired they need not return to the workforce. Unless the Fed is committed to a never-ending program of 0% interest rates and QE, then retirement savers have nothing to worry about. However, when the financial elites prick the bubbles through a prolonged tightening cycle, we'll see some of those retirees return to the workforce as Walmart greeters. Comment down below. What do you think about this? I think it's 100% spot on. And think about the risk that these retirees are taking right now. They are riding this bubble, this imploding bubble that is going to burst at some point, that keeps getting bigger and bigger. They keep pumping more and more air into this bubble. And we all know that every bubble throughout time, throughout history, has popped. And when this one does, there are going to be a lot of vulnerable people out there. And yes, many people, including retirees, are going to be looking for jobs, any kind of job, a Walmart greeter, whatever they can get. But when you're older and you're retired, you don't have the time to come back. When you lose your money, you're done. You know, think about if you're 65, 70, 75, and you're gambling in the stock market and this bubble pops, you're never coming back. You'll be working at Walmart for the rest of your life, whether that's the next 5 years, next 15 years, next 20 years. You're going to be there a long time. I want to close this video out by just elaborating a little bit on yesterday's video. If you didn't see yesterday's video, go back and check it out. You know, I was talking about big screen TVs when I was at Walmart yesterday. I've never seen Walmart with such an inventory of big screen TVs. Drove by some car lots yesterday. As I reported yesterday, 2.7 million cars on the car lots right now, 1 million more than last year. While interest rates are up, car prices still way up there. Average new car almost $48,000. I do believe that we are going to see deflation take place in America. I still believe we're going to see inflation and deflation take place at the same time. We're going to see deflation with electronics, cars, houses, because just like the 2.7 million cars that are now sitting on the car lots, and remember a year and a half ago, a year ago, 2 years ago, those car salesmen were so aggressive, telling you, you better buy a car, you better buy now, you'll never get this car again. Prices are just going up. We can't keep supply. They're making less. Every excuse in the book. There's only going to be so many of these in this color. They're only making so many of that. Prices are going up. Buy now, buy now, buy now. FOMO, fear of missing out. And now so many people got duped into buying these cars with, you know, $1,000+ a month payment. They got duped into overpaying for a house, huge mortgage payment. And just like cars, you're going to see the same thing with homes, because you have an aging population who is dying off, who are going to be leaving these houses to their kids. And what are they going to do? They're going to sell these houses. You have builders building massive amounts of houses right now. You have people losing their jobs at record rates that are going to be forced to sell homes. You're going to see a divorce rate, if not already, at one of the highest levels in history. And what happens in a divorce? They sell the house. Again, you lose your job, you get a divorce, you die. Typically, the house goes up on the market, and of course, builders are still building. Problem is, When people have no money, when they're tapped out on their credit cards, when they've destroyed their credit because they cannot make those payments on rent, the credit cards, the car's been repoed, they don't qualify to buy a home. When people don't have a job, they don't qualify to buy a home. So you're going to have all this inventory, which we're seeing now of cars. Next will be homes. But you don't have an inventory of qualified buyers. That pool is shrinking while the pool of cars and homes is beginning to rise. In autos, it's soaring. In homes, we're seeing a little bit more inventory coming on the market. Short-term rentals will be another explosion. People that can't rent those Airbnb and VRBOs, they're going to be selling homes. So you're going to see, I think at some point, an explosion of home listings too. And what happens when you don't have the buyers? Who's going to buy this stuff? You're going to see a lot of things go on sale. The cars, the RVs, the boats, the houses, land, etc. This is why I advise that all of you continue to build up your credit scores. Don't run up a lot of debt. Hold very little debt. Get your credit scores higher. And of course, have more capital. The more capital and the stronger your credit score is, the more you're going to capitalize on these massive sales that are coming, whether it's electronics, houses, land, cars, boats, all these things. You're going to take advantage of it. So be working on that and be aware your credit score does matter. So make sure you don't destroy it with FOMO, with some realtor telling you you need to buy this house right now, or some car salesman telling you to buy this car right now at these super high interest rates and super high prices. Terrible combo. When you're overpaying for an asset and then paying a much higher interest rate. Again, I think the interest rates are okay. I think these are normal. What isn't are the prices of cars and the prices of homes. This is gone to fantasy land without a doubt. So be careful out there who you're listening to. This is the time to hunker down, raise as much capital as possible, and don't get yourself in debt. Don't get yourself into trouble. Best way to avoid all this, just like, you know, people with drugs say the best way to never become a drug addict is never try a drug. Stay away from the debt, stay away from the temptations, and you'll be just fine. Have a great day. God bless every one of you. Please like, share, subscribe, and as always, look forward to speaking to each and every one of you very, very soon.